Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Do sugar babies have to pay taxes on the money and gifts they receive? The short answer is, it depends on the situation, but in many cases, the answer is yes, and it's a topic you absolutely need to understand to protect yourself. The entire issue comes down to one critical distinction the IRS makes: is it a gift or is it income? According to the IRS, a gift is a transfer of money or property to another person without getting anything of at least equal value in return. The key phrase here is detached and disinterested generosity. A birthday present from your grandmother is a gift. However, if you're receiving a consistent allowance or payments in exchange for your time, companionship, or an ongoing relationship, the IRS is very likely to view that as income for services rendered. They don't care about the labels sugar baby or sugar daddy, they only care about the nature of the transaction. If there's an expectation or an arrangement where money is provided in return for your presence or anything else, that is not a gift in the eyes of the law, it's payment. Let's break down how this applies. First, a regular cash allowance, whether it's weekly or monthly through an app like Venmo, Zelle, or even in cash, is the most likely thing to be classified as income. It looks like a payment for an ongoing service. Second, what about expensive items like designer bags, jewelry, or cars? If these are one-off, spontaneous presents with no strings attached, you can argue they are gifts. But if they are part of the agreed-upon arrangement, their fair market value can be considered income. Third, what if they pay your bills directly, like your rent or your tuition? Even though the money doesn't touch your hands, you are the one receiving the economic benefit, so the IRS considers that income for you. Now, a lot of people get confused about the gift tax. It's important to know that the gift tax is paid by the giver, not the receiver. In 2024, a person can give up to $18,000 to any single individual per year without even having to file a gift tax return. So, as the recipient, you never have to worry about paying a gift tax. Your only concern is income tax. If what you're receiving is determined to be income, you are legally required to report it. It would typically be classified as self-employment income. This means you would need to file a Schedule C with your tax return, and you'd be responsible for paying not only federal and state income taxes but also self-employment taxes, which covers Social Security and Medicare. Ignoring this is a huge risk. Failing to report income is tax evasion, which is a federal crime. The chances of getting caught are higher than you think, especially with digital payment trails. An audit could result in you owing significant back taxes, plus steep penalties and interest. This is not legal or financial advice, as I am not a tax professional. This information is for educational purposes only. Given the complexity and the high stakes, it is absolutely essential that you consult with a qualified CPA or tax attorney who can look at your specific situation and give you the correct guidance. Thank you so much for watching. If you found this video helpful and want more straightforward explanations on tricky topics, please hit that subscribe button and give this video a like.